Welcome back. Here with us on Trading Hour, and the bulls are managing to hold and defend 19,600 for what it's worth right now. We have Rohit Srivastava, founder and strategist at Indiacharts, joining in to make sense of this up move. Rohit, always a pleasure speaking with you, and thank you for joining in this morning. So it took, I think, almost 7 days, if I remember the count correctly, for the Nifty to break above this level, 19,500. How convinced are you about the breakout, the up move, and what's the reading on the Nifty, first of all?
So I think we need to watch for some time and see that it can really stay above 19,600. The only reason I'm saying this is we are in the pre-expiry week, which is essentially when stock options end their week where they can still not be charged margin for getting delivery settled. So from Friday onwards, that starts to happen. So typically what we have seen in the past is that some selling pressure does emerge either in the first half or second half of the week because people try to book their, gains there and, either move forward or whatever it is. And so that's just the short-term thing to watch out for. Whether it will result in a unexpected 100-point drop or not is the only thing to watch. Now, say that happens or doesn't happen, irrespective, if we think a little beyond this week, we are eventually headed to, I think, 19,900. So that much is pretty clear. The only very short-term hurdle is, will we get past this 19,600 or will we dip to 19,500 first or 450 first before going higher? I think that's the short-term discussion. But eventually heading to 19,900 remains an eventuality. So if we try to now check on this in relationship to Bank Nifty, because what we saw even last month is that banking stocks tended to correct much more than Nifty itself. So we had a 3-week correction, for example, in Bank Nifty when Nifty went down to 18,700 and then from there both took off. We have something similar in a very, very small time horizon. You see 3 to 4 days where Bank Nifty is actually pulled back almost to its 20-day average, which is at around 44,500. Even though Nifty has gone sort of sideways, just below 19,600. So if banking stocks do pick up from here, again, that would be a trigger for the Nifty to break out on the way higher and not give you any pullback at all. So the sector rotation has essentially been one of the factors behind why Nifty is not giving us those pullbacks. Individual sectors tend to do it. Some stocks within the sector also sometimes correct a little more than others. But the rotation, because Nifty is a wider basket across sectors, keeps Nifty moving higher and higher. And that's something to be aware of. So we would really not play the short side on Nifty in any case because the larger trend is up. So if it dips, you only look at it as an opportunity for entry or trade management, where should you get out and then re-enter and things like that very short term. But overall, it's the idea is to really continue to play the long side.
Rohit, what have you made of the IT moves over the last 3 days? Thursday, Friday, and today another 2% gain on the Nifty IT. What's explaining this euphoria that we're seeing surrounding the IT names? Technically, fundamentally, what have you picked up from the market? And now the IT index is very close to its 52-week high. So do you see more strength or will it falter?
Yeah, no, I'm smiling because you use the word euphoria. The IT sector by itself had euphoria in 2021, and then it's taken a pretty big hit if you look at the big picture. So these stocks have retraced, 60 to 70% of the gains they made in the post-COVID rally, which is pretty steep. And the guesswork we are trying to do is whether the worst is over for the sector. I think the worst is over. The big question is, do they outperform relative to other sectors that are really doing well, like capital goods and so on? Or are they just simply going to move along with the market? I think even within IT, there will be this segregation between large cap IT and mid cap IT, where mid cap IT tends to do better than the large cap. I don't know for sure whether the IT stocks will do as well as they did in 2021. I've been trying to think maybe not, but you can't say. It's a very changing and rapid environment, and a lot of new things to end up happening in terms of technology. So it's not you can't just take a blind call on it. But very short term, one thing is clear: the IT rally is not over. In fact, the rotation I was talking about is now shifting towards these two sectors, which were not participating for so far. The first is, of course, technology, and the second is metals. Now, further to add on technology, there's a seasonal factor also. I think I highlighted this in my previous interactions. used our strike software to identify that July ends up being one of the best months for IT. So the historical return at the start of the month was 4.7% or 4.8%. This month we've almost given a 6.7% return so far, which moves up the long-term average to around 5.3 or so. So it's a pretty good month in line with the seasonal trend, where July has mostly been a positive month for the tech stock. So that's another reason to think that it's not over.
Okay, Rohit, just very quickly, I want to ask you on the metal space as well, because of primarily because of what we've seen with the dollar index. I think just around 5 weeks ago or so, we were at 104. We're below 100 now. Do you expect that weakness to persist in the dollar, and that what will it lead to really happening in terms of the metals move? Where do you expect the Nifty metal index to really land because of that?
Yeah, so the Nifty metal index has been the laggard. The dollar index last week has only confirmed what I've been probably saying for the last 2-3 months. That is, the dollar index is in a long-term bear market. So it peaked in September of last year. It fell into Jan-Feb, and then it's been trying to bounce back. It had 2 rallies, both of which have failed near 103, 104. Now that we've broken all the lows for the year, it signals that the next wave down for the dollar index has started. So we are not ruling out that eventually on a 1-year basis, to go back to an 87, 88 kind of level, slowly and steadily. Now, what that means is that the metal sector ends up outperforming. Emerging markets also start doing very well. So when we look at the Nifty metal index, I think longer term, there's huge upside. Okay, shorter term, we can go level by level. But I think the first step that's going to happen is we are going to try and catch up with the highs that we made last year. Where I think around April of 22 is where the Nifty metal index actually topped out, and we should be pretty quickly catching up with those highs. I think that's the first thing that will happen with the metal index starting to outperform in the short term. So I think this is a trade for the next 1 month or 2 months that we should completely stick with.
Okay, so positive on metals, at least in the short term. Got that, Rohit. Good talking to you today. Thank you very much for joining in. We look forward to the next call. We'll take a break on that note. On the other side, the G20 finance ministers and central bank governors meet begins in Gandhinagar today. We'll tell you everything that's on the agenda and all the developments so far.